Hey everyone, John Henry here, slingshotfutures.com, and welcome to the Daily Futures Market Outlook, where we take a look at our favorite markets and formulate an attack plan for tomorrow's trading. Tomorrow being the 27th of the month, wrapping up towards the end of the month here. And yeah, for the most part, it was a really slow, grindy day. Pretty much all of the U.S. session, and it makes a lot of sense. FOMC announcements came out at 14 o'clock. It seemed like everybody was waiting. Everybody was hanging out and not really doing a whole lot. I mean, not to mention that crude oil had inventories on top of that. It just really felt like we had the market on the old pause button. But once those numbers came out at 1400, we did get some movement. So if you hung around in the afternoon session, you maybe had a little bit more luck than the waiting around in the U.S. morning session. But either way, as always, before we jump on in, make sure to swing it over to slingshotfutures.com, scroll down, and click on the Join the Daily Outlook newsletter. That's going to let you sign up for our email list so that you know every single time one of these videos comes out. Along with that, in the newsletter itself, we talk about all kinds of different stuff. Stocks, cryptocurrencies, different plays that we're looking for, and just pretty much any market. If it moves, we're probably going to talk about it at some point. So it's a great newsletter to have signed up for. Now, if you haven't done so already, make sure to click on the live trade room subscription and trial info that will let you sign up for a one-day trial so you can sit down with us in the room and see what we're all about. You'll be able to sit in the live trade room, see our live screens, and see everything that we're doing throughout the morning. And you'll also be able to kind of hang out with the members and just kind of see how everything works. It's a great way to get familiarized with everything and, you know, kind of see what we're all about. So if you haven't done so already, make sure to sign up for that one-day trial. Of course, if you do enjoy that, you can sign up for a week or a month at a time. And if you really enjoy it and you want to become a full-fledged VIP member, you get the live trade room as part of the package. So swinging on over here, let's take a look first of all at the euro. Now the euro has had a heck of a rally higher. Now the overall movement that we've had so far, really a lot of it happened at 1400. Again, everybody seemed to be kind of waiting for those FOMC announcements. Before that, really not a whole lot going on. Mostly just range-bound sideways price action. Nothing really happening on the euro. So because of that kind of back and forth and lack of movement, well, there wasn't really a whole lot to do until we actually started getting the market moving at 1400, but for the most part, big old range, and then we finally started breaking out of that range. Now, the breakout of that move, generally it gives us a big idea that, well, obviously they liked what was said, and they had some pretty good continuation to the upside, but now we have some huge pushes. And a lot of times when you get these big moves in one direction, you end up getting three pushes. It's very common to see those three pushes. You have the initial spike, buyers on the pullback aggressively jumping in, not wanting to miss it, and then the late bloomers finally coming in to get that last push. And that's what we're waiting for right now. We're waiting for those late ones to come in on the pullback. Now, you know, where we are right now on this little tiny wedge breakout, that could be all the pullback that we get before we get the continuation to the upside. We could also see a little bit further movement down to the moving average. It all depends on how far the buyers want to let this slip. But overall, we're looking for one more attempt at those highs. So what I would like to see is a little bit of a pullback further down. I mean, again, I would love to see a dip down towards at least the lows of where this wedge kind of found a shelf, and that would be at 17,546. But if we can get a slightly larger dip lower, finding support at 17,409 would make a lot of sense. And if we can go even further, 17,208 would be even better. Either way, though, looking to buy that pullback and finish off the move, because if you notice, we have an unfinished objective here at 17,770 for the buyers to push into after that gargantuan rally to the upside. Really shallow pullbacks, we're getting a little bit of an extended one here, maybe a secondary leg, and that would be kind of the picture-perfect spot to look for that continuation up to finish the job off in the overnight session. On gold, very similar situation. It's not uncommon to see the euro and gold kind of moving together, and they actually both have unfinished business above us. They're both looking for those upside objectives that have yet to be completed. In this case, for gold, it's at 1263.7. We are breaking above last month's high as well at 1259, and last month's open at 1258. We're kind of battling over, you know, does the market want to stay bullish over the month, or do they want to start falling back inside of last month? It's going to be a little bit of a fist fight here, depending on what they want to do. But overall, very similar situation here. It almost is forming the same type of wedge. We're getting a little bit of a higher low inside here. Again, I would like to see some deeper pullbacks to get those sort of late bloomers in, but the one big difference here when it comes to gold versus the euro, The euro wasn't really showing any signs of overexertion, like they just did too much too fast. In the case of golds, they really are. This all could be considered just one gigantic leg to the upside. And with that huge bullish momentum to the upside here, well, it makes me a little bit nervous that this whole thing might just be exhaustive, and this may lead into a deep, deep pullback. So if the buyers don't hold this area right now for that rally up to finish the job off at 63.7, we could easily be looking for a deeper slide down towards 55.7, 53.9, or even further for that support to come in off of those weekly levels. Because of the just sort of the aggressive breakout to the upside, we really don't have a whole lot to work with. All of the shorter term channels, even if you widen them out a little bit, they're not really going to help a whole lot. We're just too far away. So because of that distance, well, we have to start kind of refreshing and resetting back to, well, all we can really do is look for that obvious pullback and try to finish off those objectives. So right now, given that overexertion that we're seeing on gold, I would rather look for a deeper pullback down at 55.7 at least before attempting to make those highs back up to finish the job. Now, it may just in the overnight session finish the job off and, well, it might just run without you, but I would rather in this type of scenario be a little more conservative on the entries rather than being aggressive. Over on crude oil, mostly just a range. Even the inventories really didn't do a whole lot. Now, to be fair, there was a big breakdown versus what was forecasted for the inventories today and what the API was saying yesterday. The API was saying negative 10 million. The forecast for today's inventories was negative 2. So there was a huge disconnect in terms of what we were really looking to expect. And generally speaking, one of two scenarios happens when you get that kind of disconnect. Either the market goes up because they're both negative, right? They're both negative numbers, so we expect the reaction to be bullish. So buyers will be buying the pullbacks all morning, right? They'll be buying aggressively on the way up. The other scenario is that they'll let the market fall down and they'll buy all of the new lows, right? So we make a low, they buy into it. We make a new low, they buy into it. But the reason it keeps going down is because they all disappear. Nobody wants follow through because they're trying to accumulate those lows. But there is a third option when you have a huge disconnect, when one of the numbers is negative, the other's positive, or one is drastically different from the other. You may end up running into where the market just goes nowhere. It goes completely flat and sideways because nobody really wants to place any bets on either side. They know, generally speaking, that it should go up since both of them are negative in today's case, so they're looking to buy low, but they're also not too aggressive on it because, well, there's such a huge difference that it might go up 20 ticks. It might go up 3, it might go up 300. We don't know until those numbers come out. So you end up having a little bit of a shy market, and that is the scenario that we tend to find ourselves in today, especially with the market tending to buy those lows pretty aggressively, but then kind of letting off the gas pedal as it started going back in their direction. So they were buying low, and when the news came out, obviously it came out at like a -7 and some change, big rally to the upside. All of the buyers who were buying into those lows took profit. That caused a big slap lower, but we're still bullish. Buyers picked it right back up off the lows, turned it back up. We're just in a big old range. And at that, a multi-tiered range seems to fit the best. We have a multi-tiered range with a high 48.76, kind of the middle or the bottom of the top range at 48.50. And then we have the overall range lows at 48.14. We know what to do with the range: buy low, sell high, stay out of the middle. And right now we're just kind of floating around in the upper portion of the middle. Not really a whole lot that we can do here, so it's better off just sit on hands, let the market do its thing, and come back to those extremes so we can start looking for some trades once again. And then finally, on the S&P, the S&P is, well, a little bit of a hot mess today. We had some pretty good upward momentum for most of the morning, but then after we started going into 9 o'clock into the U.S. Open, we started giving a lot of that back, and we found ourselves right back at the lows again. Lows of the range seem best at around 24.72, highs of the range 79.5. And, you know, given this range is a little bit wide, if we zoom out, we can see even further confirmation that these levels might be a little bit higher, right? I could see a level like this encompassing yesterday's failure there and then dropping the highs down a little bit somewhere around here at 78.25. So, I mean, this bracket sort of area up here seems to be a good fit for the range highs, and this bracket down here seems good for the range lows. Either way, we are cycling off of the lows, so what I would like to do is see a test of the lows one more time and then get a long bounce back up towards the highs, going with a longer term trend to finish off the objective back to the highs of those range zones, if you will, for those profit targets. So pretty straightforward here on the S&P. It's a range, buy low, sell high, stay out of the middle, recycling back off of the lows. I would love to see a quick pullback to test the low again so we can buy into it for the overnight session and catch that bounce back up towards the highs. So that's going to do it for the outlook. Now, in terms of the news, tomorrow doesn't have a whole lot going on in terms of news. Only one announcement that's big at all, and that's going to be at 8:30 for the U.S. session. Core durable goods orders forecasted at 0.4%, slightly above the previous at 0.3%, and that's it. So not really anything else to worry about for tomorrow's news. Now, today we've got some small news later tonight, and we've got a bunch of small news tomorrow, but as far as big stuff, really light on the news calendar. So fingers crossed the fact that it's coming out at 8:30, we get some early morning movement instead of today where you could have taken a nap and not missed anything. But either way, like we always say, make a plan, trade the plan, follow those rules, and you'll be A-okay. Until next time, we'll see y'all then.